today the day? Is today the day? Please let this week be the week, right? Let this week be the week that we get out of this range and leave it behind. Oh man. Jeez. Maybe even today. Maybe even today. Who knows? What's up, everyone? Nice to have you here. A little bit later than usual, but it has its reasons, which I will explain. So, the reasons I am a little later today is because I was making some diamond content. Updating a video, updating some PDFs, and also creating a new strategy video, which I still have to do after the stream or tomorrow. But yeah, we were working on stuff. So yeah, here we are. Welcome everyone. Good to have you here. Just so you know, what I have here and what you see me drink is 0.0% alcohol. We do not promote that here. This is 0.0. It is called, what's it called? Tourtel Twist. In the Netherlands, you often saw me with Radler, 0.0 as well. We don't have that here in France, but we found this, which is the best alternative. It's pretty much the same, really, as Radler, which is very nice. So, yeah, just so you know, I'm also not sponsored by it or whatever, but you do see me drink because hydrating is important, but it is 0% alcohol. I also don't really like to drink alcohol anyway. Bettina, what's up? Jeroen, Crypto Paralysis, how you doing? Welcome. Bogdan, good to have you here, actively involved again. Nice long as well earlier. I mean, of course, with this move to the upside, that is. Christian, welcome. Bina, how you doing? Flotty, retesting the weekly 21 EMA and failed. See you in the 20s. Maybe see you there. Who knows? Short till 28, 30k range, or maybe lower. Low at 9 to 12. Katagan XRP. Okay. Is it flying compared to Bitcoin? Funnerin, let's go. I thought there would be no stream today. Do not worry. If I don't announce anything somewhere, there's always a stream. It's just a little bit later than usual because I was making some other content for Diamond, so that is why. But you know, AJ, GP, Dayan, welcome, everyone. So what we're gonna do in about the hour that we have together is start with Elliott Waves and observe the local price action. Now, with regards to Elliott Waves, well, I'm actually going to put an alarm in because important that I actually have one. Okay, there we go. So we're going to cover the waves of this range again because we have some new information and explain what to look out for. And we're also going to cover the weekly. Because it's interesting, and it's especially interesting in comparison to Bitcoin or comparison to Ethereum. So Ethereum has a higher probability of being bearish on the weekly, which pretty much means sideways price action and likely still another leg down. But of course, how that translates into Bitcoin is quite interesting. But there are very different charts, right? Very different charts. Ethereum is so weak compared to how the chart on Bitcoin is looking, at least for now. So yeah, very interesting. Yeah, there are bullish CVDs, but make sure to check out the silver updates, John. They're not interesting to me unless we see local strength, really. So okay, never noticed the notification earlier. What do you mean, maybe a Band-Aid? The team notification in Discord, impulsive down. Yeah, so the reason why, let me begin with this before we start analyzing the chart. Go to the 15-minute. So we had a little bit of bearish CVDs here, right? So before we go into Elliott Waves, a little bit of CVD knowledge on what's happening here. So we had bullish CVDs here. And remember, we had bearish CVDs here. Now, if you watched the content yesterday, I mentioned that I am not interested in this bearish CVD because it is a third CVD, first with the same pivot. First bearish CVD played out, second bearish CVD played out, third one, lower probabilities, not interesting, not interesting. For a bearish CVD here to increase in probabilities, you need to change market structure and see local bearish CVDs. We never got it. We got bullish CVDs, plus we had this still one here. So interesting, a lot more interesting for longs. Now here we had some bearish CVDs, interesting, price moving down. And now we have a big bullish CVD here. But because price is moving down on some volume, it is not interesting unless we stabilize and find support, start creating a structure up, right, with consistent bullish CVDs. I am not interested in this one at all. I'm only interested in new ones. What's up, Mr. Brownbug? What's up, what's up? Also have to reply to you on Discord. Yo, Thunderin. Welcome to Silver, yo. Welcome to Silver, mate. Appreciate it. Welcome to the second step on the podium, GG. Make sure, thanks, Jeroen. Make sure to fill in the form. We're gonna get you sorted. GLHF, yo. It's gonna be a good time there. It's gonna be a good time. No, this is Tourtel Twist. I'm living in France and they don't have any Radler here. So, you know, it's the way it is. Okay, let us start. Let us start. Now, I will start on the line chart again. So, short summary of the morning update, and then we jump into current price action. And we're going to talk about the weekly. Now, what is interesting is, of course, on a line chart, measurements are a little bit different, but also wicks are different. And that is probably the biggest difference between a line chart and a candlestick chart. Now, when analyzing Elliott waves, by far most often I use the candlestick chart. But also, like what you see in Elliott Wave Principle, is even the authors and the masterminds of Elliott Wave sometimes on higher time frames use line charts as well. And sometimes you therefore will see me switch to a line chart. And also, if you look at a line chart, it is so much more relaxed than a candlestick chart. I don't know, it just, I don't know if it's the colors on my chart, but also all the wicks are gone and the gray and the red and whatnot. Like it provides a sense of peace in a way. So we're going to analyze the chart, Elliott waves it is, and then chatting and Q&A and observe local price action, of course, as well as price continues to create bearish CVDs as it moves down, is moving down. So I always like to keep an eye on a 3-minute, 5-minute time frame, price moving down. But then look at this green candle. This green candle by itself created a bearish CVD here. And then we move down, another green candle, right? Bearish CVDs again with this one here. But let's see. We're a little bit like last couple of minutes. It's a bit of a sideways grind. But if you see bearish CVDs continue on a 3-minute, you're just going to move down. For me, the good afternoon, Alan. Yeah, John, in your case, it would be 1 minute. For me, the weekly chart is from 15 to 32, ABC, then 25 to 73. Another ABC, yeah, WXY, and now we go down. Yeah, I have a WXY somewhere in my folders. I labeled it ABC or WXY. It doesn't really matter. It's a 3-wave structure in the end. But of course, this can be counted a 3-waver, and then in this case, you have another 3-waver. So yeah, that's absolutely a scenario. What's up, Popo? Okay, let's start. What's my minute? What minute are we living? Minute 15. Yeah, I know exactly what you mean, Gabriel. So, bullish scenario, very simplistic. 1, 2, 3, 4, 5-wave impulsive structure on Bitcoin. Wave 2 hit the 0.236 on a line chart, which is very shallow for a wave 2. Very rare for a wave 2, as most commonly a wave 2 retraces to the 0.5 to the 786 Fibonacci. Now, if I take a fib from the low to the high that we had at the COVID dump, you can see we pretty much went to the golden pocket. That is exactly what you like to see in a wave 2. Right? A deep retracement, a nice 3-wave sharp move down, hitting that golden pocket. Now, a 0.236 retracement is very shallow for a wave 2. Has to be said. Now, your wave 3, if we then look for a 1, 2, and a 3, hit the 1.618, common target for 3. You look for a 4 and another 5. Common target for your 4 is on the chart. The 0.5 is also still relevant, which is at about 42 or something, and your invalidation is like 38. Right? So that's your validation for a wave 4. And after 4, you look for another move up in a wave 5. Now, most commonly, wave 4 is longer in time than wave 2, which means ending wave 4 after the 1-to-1, which is the 19th of August. It's now the 20th, right? So that's interesting as well. And what you can see on the 4-hour is we don't have a wick here on the line chart, because that's what the line chart does, which is interesting because, of course, on the candlestick chart, we hit important support, while on the line chart, we didn't even made a lower low here on a weekly time frame. Makes you think. Also, the 4-hour time frame, the move up so far, looks very 3-wavy on a candlestick and the line chart. So that's why on the 4-hour time frame, as explained earlier today, the probabilities, I mean, on the 4-hour remain bearish, looking for a WXY structure, right? A sideways ranging or potentially double zigzag structure. Now, this is a base channel taken from the low to the high. Low of 1 to the low of 2 to the high of 1. You want the wave 3 to escape the channel and then come back and continue for a wave 5. You don't want to see the low of the channel hit. The moment you do that, it lowers probabilities for this to be an impulsive structure. Currently, the low of the channel on the line chart is at about 44.5, 45K. A trend channel, 1, 2, 3, 4, 5, trend channel is taken from the high of 1 to the high of 3 to the low of 2. You can see it's broken. That's what you want to see, as it then increases probabilities. In a bullish scenario, you're looking for a 1, 2, 3, 4 and one more leg up in a wave 5. So your bullish scenario is very clear. Now then you have the bearish scenario, which actually is also very clear. And then again, I don't really care how we count the move up. WXY, ABC, both work. But here you are looking for a 3-wave structure. Right? Now, arguably, because of the range in the middle, you have the potential of counting 1, 2, 3, 4, 5, correction, 1, 2, 3, 4, 5. And then, you know, so then you get a bigger A, B, C, zigzag, shallow correction, zigzag. In other words, a double zigzag. Right? That's also what Gabriel mentions. And that is indeed a scenario that I have on the candlestick chart. I have a candlestick chart weekly bearish scenario, and I have a line chart weekly, and actually on the candlestick I have a WXY in here. But basically what you're then looking for is this, right? So a WXY double zigzag structure is a sharp move towards the upside. Your W here is a flat, X is a double zigzag, and then you look for a wave Y. Now, the reason why I have a WXY on my chart and not a flat, by the way, meaning A, B, C below 15K, is because we are so far away from 15K. Plus, the probabilities here are still not higher. We're looking at impulsive structures down, unless we start to get a very big wave 3, you know, convince me. But at the moment, probabilities here remain higher for corrective structures. So therefore, I just for now prefer WXY. It's still a low target. I mean, by the time we're at 31K, we'll know what's up. You know what I mean? But your target for a bearish scenario would be moving into the 30s. And your wave Y is most commonly a zigzag, triangle, and a flat, or a flat. Zigzag, of course, 535. At the moment, based on the local structures here, a zigzag doesn't look likely. You would need to have a 5-3-5 structure to the downside, or multiple 1-2s. It's just that on the daily, it doesn't look likely from an Elliott Wave probability standpoint, with a couple of 886s that are touched. But we can figure that out when we go to the daily. I can explain why it is. And then we have a flat. Now, the flat would, of course, be hilarious, where you get your A, 3-wave, right? So you get your 3-wave A, your all-time high fake out B, and then you move down in C. I mean, just imagine the panic. Well, it's interesting from a psychology point of view. Even though at the moment it doesn't yet have the highest probabilities, this bearish scenario, it is good to be aware of the bearish scenario for trade management purposes, right? So for now, still at the moment, your bullish scenario remains a higher probability, even though this wave 2 is really fucked up. And it has to be said, and this is why I mentioned ETH at the beginning, on Ethereum, the probabilities at the moment are higher. If I let me draw the chart on ETH for a second, right? So on Ethereum, you made an all-time high. We did this on ETH, right? And then we did this, and then we did that, and then we did this a little bit, and then we did that, and then we do this. We made a high. We came down. We came back up. Touched the 886. We did this. We did this. And now we have a little bit of a retracement, right? This is pretty much your Ethereum chart, right? This is your Ethereum chart. And if you look at Ethereum, because of the move to the downside here, probabilities on ETH are higher now to either look for a very big triangle, A, B, C, D, E, and eventually move up, or W, zigzag, X, double zigzag, and then a wave Y, zigzag, or a flat, or whatever, something, zigzag, flat, or triangle, right? Which, again, it increases probabilities to move sideways at the moment on Ethereum, right? So thinking about ETH compared to Bitcoin, Bitcoin is, or has shown to be a lot stronger, moving above all-time highs compared to ETH touching the 886. And on ETH, I don't know how long we've been talking about this move up, but we always had a big problem to identify this structure for an impulse, right? Because it looks very 3-wavy on ETH. You can't really count a 5-waver. It looks better as a 3-waver, this move up, which then leads you to WXY, which then leads you to triangle stuff and WXY sideways stuff. Now, translating this to Bitcoin, we therefore have to be aware, that's where it starts, of a WXY as well. Not yet the triangle, I mean, that would be quite something, but at least the potential of a WXY with more downside to come, right? So very, very interesting. And yeah, keep an eye on both Ethereum and Bitcoin. This is the ETH chart. I know the chart just because we analyzed it last weekend and the week before because many people requested during the altcoin streams on Sunday, right? So it is good to be aware of the WXY. And on the 4-hour, probabilities at the moment remain higher that the move up is corrective, but we'll get to that. We'll get to that, right? So, and that's something I want to say as well. Elliott Waves is generally multi-time frame analysis. Before the probabilities on a weekly time frame change, the probabilities will always first change on a 15-minute chart, then on a 1-hour chart, then the 4-hour, then the daily, then the weekly. So by the time weekly probabilities change, you should have, or you should have, I mean, depends on your trading plan or strat, but you should already have seen probabilities change on a 15, 1-hour, 4-hour, and daily time frame, right? And if the probabilities are bearish on a 15, and then they are bearish on a 4, and then they're bearish on a daily, I mean, if price then indeed goes low enough, you'll be bearish on a weekly. But you don't start with, oh, we're weekly on the bearish time frame, probabilities just turn bearish. It first starts on a 15, 1-hour, 4-hour daily, and then the weekly. But by the time the weekly probabilities change, you should already have positions running most of the time, at least, right? If you have a solid plan or a solid strategy, you have low time frame entries by the time you at least have weekly change in probabilities, which at the moment is not relevant just yet, right? Just yet. Piotr Skrovron It sounds a little bit Norwegian, like Finland, Norwegian, Denmark type of area. I'm not sure. But welcome to Gold. Make sure to fill in the form. Thanks for being part of the team. Oh, it's Poland. Okay. Oh, I was far off. Bettina knows. Bettina's from Poland as well. So, Team Polish, Team Poland. But, Piotr, welcome to the squad. Welcome to the team. Make sure to fill in the form. We're going to get you sorted, okay? It's Polish. Okay. Bettina ain't alone anymore. In Gold. Maybe we get another diagonal fan in Piotr. Cheers. Welcome to the top step, Okay, on the daily time frame, let's zoom in and let's get rid of the candlestick chart. As nice as it is, I do really like how clean a candlestick chart looks. I mean, look at it. So on the candlestick chart, we have this volume profile, right? It is taken from the order block here on the daily to where we are right now, including this whole range. And it's been a nice respected volume profile. We made a low, we moved up, we moved above the value area low. However, what we want to see is price move above, retest, change the structure, move above it, right? We didn't. Instead, we move below, retest, and another low. Today, we are attempting to move above it again. So far, no cigar, right? We didn't manage to get above it. We currently on the daily have a big wick to the upside. But even if you do move above the value area low, sitting by the way at 60.3K, you still want a retest and preferably a change of structure, of course, right? So it will still likely take a few days before the typical quote of trade the range until it breaks really works from a volume profile perspective. Okay, let's jump to the 4-hour time frame. Form link says it no longer accepts answers. Jeroen, any idea? Is Jeroen here? Jeroen made the form. I don't know if there's like a maximum amount of people that are allowed to fill in the form and then it's just like, we can't do it anymore. So Piotr, if you are in Discord or maybe a band-aid, can someone tag Jeroen with the message? Would be interesting to see why the form doesn't work. So on the 4-hour time frame, we have our quote-unquote bullish and our bearish scenario. So look, we want to get out of this range. But when we look at the probabilities on a 4-hour time frame, which is where we are now, the move towards the upside here so far, I don't have to explain how many waves you count in here by looking at it, just visual, right? It clearly looks like a 3-wave structure, right? Now coming off a low, a 3-wave structure can only be bullish if you look for a diagonal 1, 2, 3, 4, 5. But a diagonal is only relevant to talk about if we finish a 4. We're not even close to finishing a wave 4, right? So before that time, other scenarios have a higher probability. There is a incredibly slim chance you can somehow count this as a 1, 2, 3. This little thing is your 4 and a 5. But it's not the highest probability unless price would prove us wrong with an impulse to the upside, meaning a 5-wave structure, right? At the moment, it's not relevant. So on a 4-hour time frame, probabilities are higher. This is a 3-wave move, which therefore increases the probabilities on the 4-hour and therefore the daily to still take out the low. Yep. So unless price can show us a local sign of strength moving up impulsively, so not a 3-wave structure, because wave Y, by the way, is a 3 wave structure. We need a 5-wave structure. Only when we see a 5-wave move, 1, 2, 3, 4, 5, that moves significantly to the upside, can we switch to potentially the bulls. But at the moment, based on local information from an Elliott Wave perspective, this move up is corrective. Now, interestingly, after creating this high, this whole range that we have been in, and that's the name of the title, of course, time to leave this range behind, because holy moly, have we been analyzing this range for a long time now, 1.5 weeks, and all the small little movements. But as time passes and we continue in this range, it becomes less and less and less relevant to actually analyze all of this in a lot of detail, right? So we only this morning analyzed this little bit here, right? All of this becomes pretty much irrelevant at the moment. But the move towards the downside, since 63K here, also has a higher probability of being corrective, not impulsive. In other words, if you're very bearish and this is your high, you are looking for a finished 3-wave structure and continuation down. But that means you need 5-wave structures down. You need a 1, 2, 3, 4, 5, or you need a diagonal, right? Like a 1, 2, 3, 4, 5. But the probabilities in this section here have never been highest for these bearish scenarios. We can count 1, 2, 3, where is 4, where is 5? Not to be seen, right? We can count 1, 2, and then another 1, 2. Well, your second wave 2 now hit the 886, taken from the start to the end of your second one. Significantly lowest probabilities for a double 1, 2. No. Plus, if this is a 1, 2, your wave 2 is 8 times longer than your wave 1. Running flat in 2, very rare, never preferred. Wave B hitting the 1.618. Lots of information, but it's just for the ones that know Elliott waves, those are like reasons. For the ones that don't know, it's just equaling low probabilities that you have an impulse down. The only potential would be some sort of an expanding leading diagonal. 1, 2, 3, 4, 5, 3-wave correction, and down you go. But an expanding diagonal, and there we go again, is very rare, never preferred, unless all of the other structures fill, which therefore means that before you start thinking about, that expanding diagonal has the highest probabilities, you would need to invalidate any corrective structure here, which is WXY, right? So in other words, before you think about an expanding diagonal, you need to move significantly to the downside. So at the moment, the probabilities are higher. We are here looking for a corrective structure. Now, the fact that the probabilities are higher that this is corrective, not impulsive, meaning corrective sideways instead of impulsive 1, 2, 3, 4, 5 or a diagonal, increases the probability still to take out 63K. The problem is, of course, that when you move into WXY scenarios like I have here, W is simple, zigzag, but this wave X is complex. Inside this wave X, we are then looking for a WXY, right? And a WXY is a sideways complex structure, which is incredibly tricky to trade. The only thing we can do is have a directional bias and use other tools for potential entries. Because of course, there were definitely a lot of trades to be had in this area over here. And for the people in the setups channel, which is the, I think, second link in the description or something, right? We had a potential, or we had a short over here, right? I don't know what the, long over here. I personally had a long over here, but that was not like, that's related to diamond stuff. So there's definitely trades to be had, but from an Elliott Wave point of view, once you move into WXYs, you have many opportunities because of the complexity. So here on the chart, what you see as well, we can finish this X either here or we can finish it here, right? 56 or 55. And honestly, I really do not care, because I have a plan. I know what to look for, right? What's happening locally increases the probabilities. We have a three-wave structure up at the moment, which increases the probabilities to come down. I'll talk about the 1 hour 50 minute in a second. But the probabilities are higher. This is corrective, increasing probabilities to still look for a wave Y to the upside, right? But you might first move to 55, look for proof of support, and move up, some nice CVDs, and then go up for your Y, right? We also hit resistance, as explained in the morning. As long as you do not pass the daily naked point of control, there's no reason to think about 63.1K. We have not passed the daily naked point of control. No reason to look for any longs locally, no? So from an Elliott wave point of view, the probabilities remain higher. All of this is corrective, and we look for a WXY to still take 63K if we can. Now, the longer we go sideways, the bigger the problem becomes for that scenario because of this WX and a sideways Y in a triangle A, B, C, D, E. Potentially C finished. You want to see a three-wave move in a D, E, continuation down. So the bulls need to make quick work of starting to move towards the upside, also after 55. If you do move down straight, right, instead of looking for a D, E, and then down, if you do come down right now, look at 55K as your main area of support. That's the most important one. If we lose this, it starts to be higher probabilities we just continue. So in this case, we look for a continuation sideways. Now, A, B, C, D, E, down you go. And that is a little bit different compared to looking for a bigger Y and then a down to go, because at the moment on the 4 hour, it remains the highest probabilities to look for the low to be taken at some point. On the 1 hour time frame, we had the WXY here. See Y finished, and then look for a price to move towards the downside. This was your bearish scenario after touching the daily naked point of control as shared this morning. Now this three-wave structure can be part of a bigger flat as well, which then is A, B, C, and therefore 55K is so important. If you do come down there, 54.6 to 55.2. Lose 55K, lose this support, it starts to look, probabilities will significantly increase to just move for the low in that case, right? And then not 63K. Am I gonna put it on my chart? Yeah, why not? So then we have our W here, we have our X here. Oops. W. Now this is the problem. There's so many. You can have a W. You can have your X here, and then look for a bigger flat. A, B, C. Your B didn't take the high though. W, A, B, C. You can even put wave X here, and then look for a wave Y, where this is then A, B, C. It doesn't, like, again, it really. There's literally no reason to analyze this range in detail. It doesn't help anyone. It's just it's pretty much a waste of time. So yeah, and your bullish scenario, now that we have this move to the downside, significant move down, can only be like a 1 2 1 2. So 1 2 1 2 up. It's just lower probabilities for that to happen. So because you move down this far, probabilities increase to take the low, unless price starts to stabilize. We have a little bit, we are close to support. Maybe we've hit it. No, we are close. The daily and the daily naked point of control cool to observe the reaction. But for the probabilities for the bulls to increase locally, we would need price to stabilize, bounce up, retracement, bounce up, and create market structure up with bullish CVDs. That is what we're looking for. That's what we're looking for. So if we summarize all of this rangy price action, on the weekly time frame, the probabilities as it stands remain higher for the bulls. Yes, you have a 236 touch at the wave 2, which is very rare, but we still need to look for significant weakness on a weekly time frame before turning into bear market thinking, which then would be similar to ETH, WXY, or a bigger triangle, right? On the 4-hour time frame, the probabilities remain higher to take out this low still because of the 3-wave nature of the move up. On the 1-hour time frame, or at least this range here, probabilities remain higher to take out 63K. But the longer we move sideways here, the lower the probabilities and the higher the probabilities to just move down. Right? Now, even though you have these very long ranges, it actually gives a lot of trading opportunities. Right? So Elliott waves can give you great directional bias, but having a set of tools, additional tools besides Elliott waves, can significantly enhance your profit capabilities and your trading capabilities, which is exactly what I do as well, in especially these type of conditions where price action is moving in a very complex sideways structure. I use other tools to identify my entries, and then I have support and resistance areas for my exits, right? So yeah, hopefully today, tomorrow, or at least before the end of this week, we have moved out of this range. And moving out means I want to see the low taken or the high taken. Literally, don't care, but the probabilities at the moment are looking higher now for this to be a 3-waver, of course, with the WXY. So that would increase the probabilities for 55K. But yeah, I've explained the probabilities. Weekly remains bullish till proven otherwise. 4-hour time frame, high probabilities to take the low. 1-hour probabilities high to take the high. 15-minute time frame, at the moment, higher probabilities for a 3-wave structure here. And a bit of a move to the downside, and see if we can visit 55K, no? We do have some support coming up very soon. And we'll see if that holds, the yes, the no. For the bulls, to increase probabilities, locally on a 15, so here, I need to see price holding, move up, bullish CVDs, and then I can look for higher. So this is also me talking about some of the other tools I like to use, right? I talk about, this is my support area. I talk about, okay, a bit of market structure, bit of CVD, bit of Elliott waves. And that is what significantly impacts my probabilities and counting as well. So yeah, for now, price is moving down. Consistent bearish CVDs. It hasn't stopped yet. Red candle here. CVD on yellow moving up, which is an in-candle bearish CVD. So more buyers than sellers here in this candle. But it closed red, which of course is bearish. So yeah, nice little bit of price action. And on the daily, almost forgot. So if we are looking for a big zigzag down to low 30s, of course, what we are then looking for is a 5, 3, and a 5. Now we can count this as a leading diagonal. Label that an A. Oh. Have a B. And then we need a C. And then for a C, you would need, if you want to get that low, you need a 1, 2, 3, 4, 5. But your C is going to be incredibly extended. So your most bearish scenario is it this one? Yeah. Would be this, a double 1, 2. no, you're going to move down if this plays out. Again, not yet highest probabilities, but this would be your scenario that leads to below 35k easy. All right. Now, what lowers the probabilities is your first two hit the 886. It's not great for a wave 2. It's a rare target for a wave 2, not preferred. So this is what really impacts the probabilities negatively, and it's questionable if this wave 1 here is a 5 wave or a 3 wave on the lower time frame. So you can count the move down as an impulse, but your wave 4 is very short if you do, and it arguably looks a bit better as a 3 waver, but and that would be bullish again. So yeah, at the moment doesn't have the highest probabilities. Probabilities remain higher for now that all of this is corrective. Yeah, so therefore on the weekly, probabilities remain higher for price to take out all-time high. On the daily, probabilities are higher that this is corrective, not impulsive, meaning 1, 2, 1, 2, and 3 down. Yes, you can take the low, no problem, but corrective, which increases probabilities also to take the high on the weekly. On a 4-hour though, probability is higher. This is a 3 wave, potential for a W, X, and a Y. That would be bearish. On the 1 hour, probability is higher. This is corrective to take 63k. So you can see that different time frames have different probabilities. And then we have the 15-minute time frame, where probabilities are now higher. You have a 3 wave structure here, and that increases probabilities to look at 55k. So yeah, you know, what can we do? Hopefully we get out of this range very, very soon. So there were some very, very nice trades in this area. I've actually really enjoyed this range from a trader's perspective. It was also nice to count, but now it starts to piss me off. So I don't want to go in detail anymore. I don't like to count this in detail anymore. I just look at CVD, and those are the probabilities. So yeah, weekly time frame bull, 4-hour bear, 1 hour bull, 50-minute time frame. We just wait for support again, and also we look for 55k, and then that is your must-hold box. This one here. If you lose this, that's going to be a problem for the bulls, and we might be into the 40s very soon. Not a streaming perspective. You know, the thing is, when you upload three times a day, I always have new stuff, right? I always talk about news. Like, of course, there's overlap between videos and this scenario and that scenario, but I always have something new in the videos. That's why in my content, in the description, in my normal videos, I always write the scenario with the timestamp, and then the scenario, and then behind it I write same, update, or new. Just so people know, compared to the previous update, is this new, is this updated, or is this exactly the same as it was? So people can go through the content a bit quicker. It's just like an act of service, I suppose. And once you start ranging, it's very interesting to count this. There's a lot of new ideas and counts. But once things become very long and sideways, and eventually you're like, fuck this. Just get out of this range, right? And that is the moment we have reached at the moment. So yeah, let's check what you guys have been up to. When did we start? We started at like minute 15 or something. Oh, that's good. Boom, boom. Oh yeah, absolutely, Arturo. And that's also why, from an Elliott Wave perspective, of course, this becomes very complex to count in a lot of detail. And that is why it's important to zoom out. So I don't know. There's probably quite a lot of people watching that know the basics of Elliott waves, or they are counters themselves, or at least they find it enjoyable, or they use it. If you know what's going on a weekly and a 4-hour time frame, and you don't know what's going on a 15 and a 1-hour time frame, just zoom out. Go to the 4-hour and wait for the probabilities to play out in your higher probability scenario. And if the 15-minute and the 1-hour at a later stage provide more clarity, start counting the 15 and the 1 again and trade them. So, said differently, if you're counting a 50-minute time frame and you have no idea what's happening, but you know what's happening on a 1-hour time frame, and you have a good idea of the probabilities on a 1-hour, you just focus on the 1 hour and you forget about the 15. So that is also why I don't want to go in detail here anymore, right? Yeah, I can count W, X, and a Y, or a W, X, and a Y, and I don't know, W, X, Y, X, Z, and ta. I stopped caring. I stopped putting, because it takes a lot of time to count the 15 or arguably the 1 hour here. But the only thing that I need to know is, are the probabilities higher? This is corrective or impulsive. Are the probabilities higher? This is corrective or impulsive. That's the question that you want to ask yourself before analyzing the range. And then you put this on your chart, which I recommend for people that start, right? Is impulsive equals, right? And then you have impulse, diagonal, double 1, 2. And then you have corrective, zigzag, flat, WXY, triangle. Now, if you are analyzing a structure, it is much easier to analyze this compared to this, right? It's well known that corrective structures are more difficult than impulsive structures. So if you are analyzing a structure like this one here, the only thing you got to do really is figure out, can I count an impulse, a diagonal, or a double 1, 2 here? And if you can't, probabilities are higher for corrective structures. Now, it is then good to know to at least have an idea of what you're looking for. So that is why I also, of course, have the bearish scenario with the triangle here, right? But from this high to the downside, can we count a corrective structure? A good high probability corrective or impulsive structure? No, we needed a 1, 2, 3, 4, 5. We never got 4 and 5. Can we count a high probability 1, 2, 3, 4, 5? No, because 4 overlap with 1. Can we count a high probability 1, 2, 1, 2? Double or multi 1, 2? No. Your second wave 2 is even longer than the first. Your first wave 2 here is 8 times longer than wave 1. Running flat, low probabilities. B touched the 1.618. In this case, also again, wave B here touched the 1.618. Wave C is over twice the length of A plus B, right? Plus, you then also have a three-wave structure now to the upside. So you need some sort of a W, X, and this has to be a Y, right? Okay, that works, but then still your W is a flat. It's just not great probabilities for impulses down. And then you're going to be stuck with a diagonal, but the diagonal is an expanding diagonal, so an impulse doesn't work. A double 1, 2 here is also very low probabilities, officially not invalidated because you would need to take this high here. And they have a diagonal, but the diagonal is an expanding diagonal, and an expanding diagonal is very rare and never preferred unless everything else fails. So when we then think about, okay, well, it's very difficult to count an impulse diagonal or a double 1, 2 with high probabilities. Increasing the probabilities, the price action after this high is corrective. And then comes the part of, okay, so what corrective structure are we then looking for? Right, at the beginning, it's easy. We got a three-wave structure up, okay, and we got a three-wave structure down, A, B, C, zigzag, cool. And then we got this mess here, right, which started with a flat by the looks of it. I still think a WXY double zigzag looks nice here. But then we have to potentially think about WXY X, and then Z. WXY XZ is very rare, never preferred. So then you get into, okay, so how can we label this? Well, based on the structure at the moment, is this a zigzag? No. A, B, C, and up? No. Double zigzag, WXY, potentially. However, your wave X hit the 0.7, and the 0.7 does significantly reduce probabilities for a double zigzag, because you want a double zigzag to be sharp, WXY, with a short X. You don't like to see an X go all the way to the 0.7. It really lowers probability. So that's not too great. It's not an invalidation, but it's also not awesome, right? Now then you have flat structures. Well, for a flat ABC, wave B needs to go at least to the 0.9, taken from the start to the end of your first zigzag here. That didn't happen, so a flat is completely irrelevant. Then we have a triangle. Well, for a triangle, we then need A, B, C. Oh, not allowed. C not allowed to go below A. We don't count this as a wave A, and then B, C, D, E. Reason is that your wave A now is a double zigzag, which doesn't even make sense, because if one of the waves in a triangle is complex, it's wave C, D, or B in that order. Wave C by far most common, wave D is uncommon, wave B is very rare, A is not even an option in the book. So your flat is like, nope. Triangle since the start here is also nope, which then leaves you with like double zigzag. But if this is a double zigzag WXY, it should be finished here, right? So you have your W, you have your X, and you have your Y, and you're done, which means that now you want to see continuation up after this low is in. Now, because we then look for a W, X, and a Y, and we know that wave, and here comes again, this is like complex stuff, guys, especially for people that are new, very abracadabra, right? So now we then have our wave Y that we're looking for, but wave Y can be one of three structures. Wave Y can be a zigzag, can be a flat, can be a triangle. Now, because of wave X being so shallow, only touching the 0.382 Fibonacci taken from the low to the high of W, a double zigzag makes most sense, right? Because if you are talking about a sideways WXY, not a sharp, so a sharp WXY is ABC, correction, ABC, you want a shallow X. This is a sharp double zigzag WXY. In a sideways WXY, you have a 3-wave up, a 3-wave down, and then, for example, a flat in a wave Y, right? A sideways W, X, Y, where your wave X moves deep. Golden pocket, 786, 886, it can even take the low of your W. So the fact that price retraced incredibly shallow here, only touching the 382 so far, would increase probabilities for a double zigzag WX and then a zigzag in a wave Y. In that case, we then need to count A, B, C. But if this is the end of your wave Y, in a bigger W, X, Y, your wave Y, first of all, is incredibly short, didn't take the high of W, which is not even really allowed, right? Common target for Y is at like 65 to 68K. Doesn't make any sense to finish a wave Y at this high. So therefore, we then need to think, how about A, B, C? Oh, that's still an option. That is why in the analysis, I talk about, I have support here, and I literally explain what I'm looking for the probabilities to increase to move up, which means hit support, look, of course, the invalidation is taking this low, and then look for price to move up. I don't care about entering a low. I don't care about entering at highs. I care about taking the middle of the move, right? Wait for price to show me it wants to move back up. Wait for support to be hit. Wait for a range to form. Wait for price to grind to the upside. Wait for indicators to be in my favor. And then I eventually be like, okay, I'll be part of this move, right? I'm happy to look for upside. And then we can finish wave Y being a double zigzag at the high here. So coming back to literally the table here, impulse down, no. Diagonal, well, expanding diagonal, but that's very rare, so that's definitely not preferred. Double 1, 2, very low probabilities. Okay, so that's a problem for bears, impulsive bears. Then we get to the corrective structures. Now we identified a flat is absolutely ridiculous because we didn't touch the 0.9 here, so we can't count a flat here. Triangle, not possible, leaving us with a zigzag WXY. Zigzag is possible, WXY. We did hit the 0.7, lowest probabilities, not an invalidation. This is your low. You want price to move up now. And your alternative, right? Your second, or I mean, none of these two is preferred really. Your other scenario is a WXY, where this by itself is some sort of a bigger WXY. Look for 55, and then you move up for your bigger Y. And this is where then the complexity comes in. So because an internal WXY being a sideways range, this is clearly a sideways range, right? Wave W can be a zigzag or a flat. Wave X can literally be any corrective structure, but is most commonly a zigzag. And then you have wave Y, which can be a zigzag, a flat, or a triangle. Now it starts to get really messy, right? Now wave W in this case would be a zigzag. If we go back, So if we avoid talking about this and we talk about WXY, this would be your W. But now we need to put our wave X somewhere. The problem with X is wave X can be any corrective structure, but most commonly a zigzag, but it can be anything. Can be a triangle, can be a WXY by itself, can be a zigzag, can be a flat, right? So now then the question becomes, okay, so where does X actually end, right? Is wave X ending over here with then a three-wave structure? Is wave X ending over here with then a running flat structure? Is wave X ending over here, right? With then whatever we are counting this as. And then eventually, after X, you still have one. So this is why I do not want to go in detail, in the videos, which I've done in the live stream now, because you see that there's options, and that is why I keep it very simple. So I save you all of this analysis. I save it in the videos, and the only thing I put on the chart is this. Just to make sure, I keep it very, very simple so people can follow the analysis in the videos. So if you're looking at the WXY, probability is lower, this is impulsive down, higher it's corrective down, increases probabilities. We're not yet finished with a wave Y for the potential of 63K to be taken. To summarize the whole thing that I just said, analyzing these structures and these structures, it's literally what you see on the chart. Either your X is here, and we look for an ABC, that's the green line, or potentially your X is going here, or your X is here, and your Y goes here, and then I don't care, right? But you would look for a low to be taken and then another move up. So that's why I just have two dotted lines on the chart, saving you all the hassle in the videos, keeping the videos short and sweet, but still making sure that you guys know, like, okay, this is what we're looking at, right? And hopefully then it's useful and valuable, and you have your own trading plan, your own trading strategy, so you actually know what to do. Because obviously nowhere on any YouTube channel is there any financial advice. You need your plan, your strat. So even though we have options, I know exactly what I'm looking for to enter trades, to exit trades, to enter new trades. Trading this range has been zero problem. But I have a clear plan. So yeah. So when you are new to Elliott Waves and you want to analyze a range, start with trying to find an impulse diagonal or a double 1-2, right? If you have a significant low or a significant high, try and count, is this an impulse, a diagonal, or double 1-2? Is this an impulse, diagonal, or double 1-2? If it's not, probability is higher, it's corrective. If the probabilities are higher, this is corrective. The probabilities are higher to take the low. Probability is higher, this is corrective. Probability is higher to take the high, right? And of course, it can change as you get more information, but most commonly, you will be right. If you get a 3-wave move up, probabilities are higher to take the low, unless you then move into a bigger diagonal, but you'll only know that at a later stage. Right? Most commonly, you're going to be correct. And then you have directional bias. Don't start with, oh shit, we have a big range here, right? Oh, what is it? Start here and then go there. No. So yeah, very nice. Did we now hit? Oh, we're almost there. Didn't yet hit support. Got close though. Below the point of control. Let's see. If price does not fall quicker, if we are really looking for a deep structure to take out the low, we want, of course, a quick move. So, but we know what to look for. Obviously, no financial advice, but it's really stupid to go short at the low unless you somehow have a plan that does that. But now it's interesting to start looking for longs again. And if we do get structure that increases probabilities for the bears, some more bearish CVD diffs and whatever, then we can go short again. But for now, this was your area. Oh, now you're at the low. 1.5K has went for dinner. Yeah, I mean, that's also Bitcoin because we are so high up in price, 60K, 70K. You know, a 1% move is like $600, you know. It's crazy. At 15K, of course, 1% is significantly different. 150 or $150 up and down. So, no. Yeah. Interesting price action. Interesting price action. Julian from San Francisco. Love when you teach analysis. Cheers, Julian. Hope you like that. You know, good to hear. Good to hear. Good to hear. Cheers, man. Good to have you here as well. 10K naked point of control. Additionally, we see published. Is it possible that the low is in 58,500, 57,800? So that would be here. Yes, but then now, if that's the case, you want price to stabilize, right? So on a 15-minute, that's what I like the most. On a 15, at the moment, probabilities look higher for an impulse, right? We have price moving down. We have an increased amount of volume, right? 1, 2, 3, 4, 5 potential here, right? Reach this support area. Look for price to stabilize. Move up, move down a bit, move up, bullish CVDs. Okay, interesting to look for a bounce, right? We still have a little bit of support down here, by the way, which is 57,600. So yeah, there's always that chance. And then we want to see price move up, right? So your quote unquote bullish case is ABC finish and you move up. But then again, you want price to stabilize first. I mean, that's how I do my thing. I mean, I don't catch lows or highs. I wait for price to to show me strength or weakness, which takes time. Wait, how did I miss this? So Piotr was well known. Maybe a band-aid, thanks. Thomas Sapé. Make sure to fill in the form. I'm going to bump you up to the silver membership. But you sport, man. Been here for so long. As Savi on the channel. And here he goes. Yo, welcome to Diamond. Welcome to Diamond. His third month as a member. That's why he has the gold badge. And entering the Diamond squad. Yo, make sure to, again, fill in the form. We're going to get you sorted. But, yo, great to see you being part of the squad, man. It's great to see you join after such a long time of being part of the channel as well. So cheers, man. It's gonna be fruitful, gonna be good. We're gonna get you sorted. Of course, also the fact that you joined during the stream, we can immediately give you, if you fill in the form, we can immediately give you the roles in Discord as well. So yo, you sport. Welcome, man. Welcome. Is he still here or not? I'm actually not even sure. You were lost in the sauce. Yeah, I was cooking. I was doing my thing. SPX touched the 886. Bull Fiesta not over yet. 886 probabilities. If you pulled the right one. Yeah. I haven't checked SPX, to be honest. Do you ever use the 3 pull on the hourly chart? You mean a trend-based extension, I suppose, a Fibonacci extension. Yes, on the WXY. Politena, what time frame? Because your W on a 1 hour, well, 4 hour time frame. If you pull a trend-based fib here, this is indeed a 1-to-1 touch here, exactly, right? So it increases probabilities for a 3-wave move. On the weekly time frame, you got to go to log because now you're looking 15K to 70K. That's a big percentage difference. And then price here, hit the 1.618. And if you go to linear, it's above the 2.618. So I guess you're talking about the more local time frame. Yes. Too fast, too furious. ETH front run Bitcoin might give us the future. Yeah, ETH with the WXY. Imagine Bitcoin goes into a flat, takes out all-time high, moves to 80K, then dumps down to 30K. Lol. Yo. Yeah, everyone's gonna be like Black Swan event, and we're gonna be like flat. Flat. Five candles so close to each other. Yeah. Bonjour tout le monde. What's up, Amit? No. Wave 4, 618 is just een invalidation. Ben je nou biertje doen? Nee, kerel. Dit is radler in Frankrijk. 0.0. Hier hebben we geen radler, man. Ben je nou biertje doen, joh? Okay. Well, we're... Sam, by the way, good to have you here, Sam. Welcome. So far, no cigar. Quote, quote. Okay. What's up with the Bybit spikes? Wait for price to stabilize. That's the way to go at the moment. Just wait. Patience. The move down has been quite nice. It's not very extended. It's just a solid move from 60 point, well, pretty much 61K to 59K. Nice move down, but it definitely has stopped moving down as quick as it did. So it's interesting to observe the reaction at support now. Elliott trades pattern up. Make sure to check the join button below the live stream. Does like 10? I'll take the same trade. Yeah, they all press the same button. Yeah, welcome, man. Good to have you there. Good to have you there. Okay, I see. Yeah. Yeah, we hit the 1-to-1. So, of course, there's the potential, therefore, for a finished double zigzag. But it remains a complex. So yep, and then you do this, and then you do that, and then you do this, and then you do this, and then we do this, and then yo, what's going on there? Why am I stuck? Interesting. But it just doesn't change the probabilities where on the 4 hour bear 1 hour, so 4 hour high probabilities, this is 3 waves, still look for the lows until proven otherwise, we still have enough time. On the 1 hour probabilities remain higher to take 63k. If we do continue this range for a lot longer though, those probabilities might go down. I don't mind taking the lows first, but you don't want to get into this. So yeah, there's absolutely the potential to now look for A and then B and the C. And now we therefore want to have support here. You mean these spikes? Yeah, the yellow CVD is crazy. Yeah, this is like over here at the beginning, it's interesting to use, but now this, it would have bearish CVD now with the small green candles here, lower high, higher high, but I would now prefer to only use CVD here. So the low is made, wait for a range to form, observe new CVD divs. Little bit of bearish CVDs actually on blue. Hell, imagine crypto Twitter. Price moves to 80k, 500 million per Bitcoin is next, and then before you know it, 30k. Oh, I have to bring Koen Radler to France. I mean, look, this is literally, if you go to France and you enjoy Radler in the sun, look, by the way, I'm not sponsored. I don't drink alcohol. This is 0.0. And when I just happened, or actually my wife found it because she was looking for an alternative of Radler. So just FYI. But hey, if someone from, what's this brand, Tourtel is watching, send me a message because I'll be buying your stuff. But anyway, this is literally Radler in France. So in the Netherlands, we have this drink, Amstel Radler. Amstel, in my opinion, is the best Radler. It's really good. And then I go to France and figure out that, oh shit, they don't actually have that here. So I need to see what's up. Yeah, Radler is like a cider. It's like a mix between beer and lemon. So it's like beer and lemon water. It's just lemon. It's fresh. It's nice. It doesn't taste like beer because I don't like beer taste. I never drink beer, but I like Radler, and the whole beer taste is gone. It's more like a cider, like a lemon thing, which I really enjoy. The problem is that in France, they don't have that here. So yeah, your Spanish shop, apparently in Spain they do, but yeah. So I had to find an alternative, and then my wife found an alternative, which is this one. So what is this? Tourtel twist, yo. Double 1-2 to the upside. I mean, potential, but if this is a double 1-2, then we are, of course, expecting price to move up impulsively in a wave 3. That would increase probabilities. This is an impulse instead of a 3-waver. So that would change probabilities. I think I spoke about it in a morning update earlier today, that if you do move up impulsively, and I think today as well in the live stream, if you do move up with an impulse to 68, a 5-waver, yeah, you might want to start looking for the potential of bullish continuation with the low to be in. But at the moment, it's not the highest probabilities. Double 1-2 here, 1-2 is still an option, but it doesn't really yet fit the 4-hour time frame context. Yeah, also from the high to the low. What would be the next target if the low is in? 65 to 68k. Big Schnitz. Oh, wait. Are you talking about the low at 49 or you mean the low at 56? If the low at 56, you mean, and this is the end of like correction, and you look for another leg up, 65 to 68. Mind you, you can reach that target by creating a bigger flat, moving to 55 and then to 60, 65, 68. If you talk about 49k is the low, then your minimum target would be 81.3k. That's minimum, by the way. Yeah, I figured. I think we are doing the C of the flat to 53, 55. Switch to this plan now. Yeah. Yeah. So as long as you don't see clear signs of strength. So let's have a look. Yeah. Confluence with the box as well. Preferably though, like if you do get this low, you don't actually want to hit 53 because you have the 1.618, and the moment you hit the 1.618, it really reduces probabilities for wave B of a flat. So in other words, preferably you hold the area around 55. So this box here is 54.6, 55.2. That would be your place to stay. You wanna move down, 5-wave structure, pop, support, range, move up, bit of a retracement, pull CVDs, move up, resistance into support, pop, and then 65, 68. Yeah, that would then be your arguably more bullish scenario. Beer with lemon, yeah. Do you like Eminem? Or I have Eminem in my list. Yeah, the thing is, I have a big list, so I'm not someone that really organizes its music. So I have one big list with favorites, which goes from like general pop songs to alternative rock to hardstyle to I even have, I think, like some jump style songs in there or whatever, to techno, to deep house, to, you fill in the dots. I have all sorts of stuff in there. So yeah, dance, country music. It's just whenever I hear a song, I just click on put it in a list and ta-da. So I can go, and I can go from a very relaxing, deep chill house song to the next song being an absolute banger hardstyle. I can go from a very sad song to like alternative rock and so I know it's just, but I that's the playlist I would listen to. But I also tend to check my discovery weekly discovery playlist and those type of things, get some new songs, figure out what's out there. A few days ago I drank Radler first time. It was actually good. It is nice. Nice that you tried it. Standard also here in Austria. It's nice, yeah, if you go on skiing holiday, sitting in the sun on the mountain. Hi from France. Hello back from France. Almost bonsoir. Not yet. Bon afternoon. How many 1-2s are normal after an ABC? The ABC doesn't matter. It's just when you look for an impulse to start, right? You look at least for a double 1-2 minimum. And the reason you like every impulse, I mean, always has a double 1-2, because in the end you look for a 1, 2, 3, 4, 5. But your wave 3, of course, internally always creates another smaller 1, 2, 3, 4, 5. So you always look for a double 1-2 minimum. But you can have multiple 1-2s. You can have 3 or 4 or 5 1-2s. Yeah. Like on the 4-hour time frame here, we had a very nice multi 1 2, right? 1 2 1 2, and then not to forget that also over here, 1 second, I need to you have at least another double 1 2 here. 1 2 1 2 3 4 5 4 5 4 5 4 5. For every 1 2 you need a 4 5, right? So you have a couple of 1 2s here that are stacked, resulting in 4 5s. This impulse that you had here is a wave C, but this is your like traditional perfect impulsive structure. I mean, the subwaves can be a bit tricky at times, right? A bit of three-wave V structures going on, but this is incredibly nice. 1 2 1 2, couple of 1 2s, 3 4 5 4 5, finished. Yeah, very nice. Appreciate if you could show quick setup on CVD. I don't share setups in gold, nor do I ever share trades that I take, but I do share setups in the setups channel and in Diamond, but those are not setups as in signals. Those are interesting trades from an Elliott Wave point of view, right? So why is a certain trade interesting from an Elliott Wave point of view? And then I always explain the why. So I explain, okay, we're looking for this, and that is why your entry would generally be here and then stop loss there, because that's invalidation, and that's, you know, but depending on the reaction, if price gets there, I might take it or I may not, right? That's my personal plan. But I explain why a setup is interesting from an Elliott Wave point of view, but I never share signals. And in Diamond, I explain more about my process and exactly what I'm looking for. But I can't share like a setup. Now, what you want to see on this CVD, right, in general, is, and this is what I always say in videos as well, your general way of using CVD is get a grind up or down and see price continuously having bullish CVDs as price is moving up with higher highs, higher lows, vice versa for price to move down. If you hit resistance and you create bearish CVDs, that's a setup, arguably, because of your resistance. Right, so for example, at the high, we literally had this, right? So if you talk about using CVD for setups, you had bearish CVDs here. After hitting resistance, price moving down, this is not yet interesting, moving down again, then move up, flat structure here. And then you create bearish CVDs locally on the CVD. Let me show you. I guess I can show it on the 15. Yeah. So got to zoom in a little. But don't have to zoom in. You can clearly see on blue, right? You have here a lower high on price, but you do have a higher high on the CVD. This high almost took the one here, but it didn't. Didn't actually take it. So you do have a bearish CVD here after hitting resistance. So that could be a setup. That could be an example of, okay, that's interesting. We hit some resistance. We grind to the downside. We move back up, bearish CVDs. There's a potential entry there. Price moving up, grinding. Bullish CVDs here, not too interesting. Bullish CVD here, very interesting. Right? So the best thing to do would be to implement CVD in your personal trading plan. What are the tools you use? What are the support resistances you have it on the chart? Right? Do you use Elliott waves for context? And then as price is hitting these areas, keep an eye on CVD, because you might be able to then use CVD to confirm a entry. That can be interesting. But of course, I never give signals or show like I trade this. I only talk about in the setup channel and in Diamond as well. In Diamond, I'm more open and transparent. But even there, I never talk about I take it, because I think my goal is people should fish for themselves. I'm not a signal service. They got to go somewhere else. So it's all teaching. And what I teach is how do I trade in Diamond and how you can make your own plan and strategy. And the setup channel is purely focused on how can you even trade Elliott waves. Analyzing Elliott waves is one. Trading Elliott waves, that's another story. So how do you actually get into trading Elliott waves? That's what the setup channel is for. It's not positions I take or not take. I might take them if I see what I want to see based on my plan. But that's what the link in the description, setups channel, is for, like the second link or something. Butler, how to copy your CVD script in AGGR. All the steps are mentioned in Discord. First of all, the link below this live stream, the first link should be a link to Discord. Then you go to the Koens updates section here, follow the steps. You download, or you just use a template here. I have one template here, right? The newest template is also free, by the way, which you can download. But there you go. Those are the steps. And in the CVD channel, this one, I also wrote all the steps here. Oh no, that's the, oh here. But you only get access to this channel if you follow the steps in Koens updates. It's completely free, but it's nice if people support the channel by registering as an affiliate. And if they don't, that's fine. But then there will be a pay option, because some people ask like, yo, can I just pay for it? I'm like, okay. So that is yet to come. We are very close on, by the way, launching that. I'm just checking if there's a way to get a good like system in the background. Oui, bonsoir. Fubo. Fandorin. Yeah, I mean, when you work in a nightclub, things happen. Huh? I was in Antibes this morning. Yo, guys, next door. Hopefully you had a good time there. Yes, this would be an expanding flat CDMs, with wave A being a WXY then preferred in that case. Wave B, most commonly a zigzag structure to 80, and then a wave C down to 30. Yes. So that's still, that would be your bearish scenario. If you take all-time high, then that is your bearish scenario. It's a flat. Cheers, iButler. So the blue CVD is aggregated, yellow is Bybit, as that was the first platform I ever used. So I got used to reading their CVD. But as you can see, I don't have the name tags anymore, because it actually doesn't matter. You have blue and yellow, they're both as important. And you'll very quickly train yourself in reading when to look for what CVD divergence. The thing is, if they are competing against one another, right? First of all, again, build some statistics, train yourself a little. But if you're at resistance and you see bearish CVD, it of course has it has more relevance. If you're at support and you see bullish CVD, new bullish CVD forming, that's important. Nice one, Adam. conversations in chat, yo. Okay. It is time for me to continue with the day. I gotta upload some stuff for Diamond. And if I can, record a new video for Diamond. And what else do I have? Of course, make another YouTube update later today. Let's see what the chart is going to give us in the upcoming hour. Usually I provide an update quite soon, but we went live a little bit later, and let's see if the chart give some more info. So yeah, I'm gonna continue working on some Diamond stuff. Still, of course, some sports in my agenda as well. and then chilling with the wifey later. Spend some time after another full day. I mean, she also works on her business, so we're both busy. For now it does, but I do like a little bit of volatility to get out of this range. Please. Did we hit support now? Almost. You can see what price does there. So yeah. Thank you everyone for popping in. Appreciate you watching, subscribing, chilling, chatting. Cheers, Sam, maybe Band-Aid, Fingering, Big Schnitzel, John, everyone here, I Butler. Appreciate you guys hanging out. Tonight, I mean, you can expect an update tonight. Honestly, I don't really want to make an update again at 10 p.m., 11 p.m., but it's already 6 p.m. Of course, we preferably wait for a little bit of info to come in with new price action. So let's see what the chart gives us. And then take it from there, see if I upload something tonight. I want to do sports, still have to study, spend some time with the wifey. Let's see what the chart gives us. Might be a very short update, but we'll see. So, thanks for being here. And, gonna catch you at the next one, though.